Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, May 13th, 4:46 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup daily market insight video. Market state, we're in an uptrend for a week now, 6 sessions. You can see the trend gauge over here. We've got the green arrow on all four indicators. That means market leaders, and all five of the major indexes trending above the three time frames that we track: the short-term 21-day exponential moving average, medium-term 50-day moving average, and long-term 200-day moving average. Well, what happened today? Not a whole lot. Gap up in the morning, which was a bit of a surprise with big inflation data pending over the next 2 days, but that gap faded right away. But still traded in a tight range. In fact, an inside day for the S&P 500, which means today's high and today's low were contained within the high and low from Friday, which was already a compressed range. So market just kind of sitting around waiting on this inflation data to determine or to interpret what they think that impact will have on the market. So we'll be getting PPI before the open on Tuesday and CPI before the open on Wednesday. Here are the numbers. Our 2121 leaders list, the weakest of anything being displayed here, down 0.76%. We'll go through that new list. The updated 2121, discuss what dropped and what was dropped and what was added, but only 5 of them up today, 15 down. The big 8, led by Apple and Tesla, up 0.4% on average. The RG8, this is our in-house growth 8 ETF composite. That says led by Tesla. That should say led by ARK-K. Up an average of 0.26%. S&P 500 gapped up 0.25%, faded. Basically flat on the day, just down 0.02%. Same thing for the equal weighted S&P. NASDAQ 100 up about 0.25%. Equal weighted NASDAQ 100 slightly better. Dow broke a winning streak, down 0.2. Mid caps down 0.1. Russell 2000 small caps up 0.1. Global diversified 60/40 stock bond just barely negative. In-house GROTECTION down. This is our flagship portfolio, down 0.14%, dragged down by Sava, Carrier. You'll see when we go through the 2121 list how everything's flagged in there that we own. So let's get into the charts. We'll start with the S&P 500. You can see the very tight range, almost a mirror image of the action on Friday. Let's bring up a 5-minute chart here. Friday, we gapped up, ran up, faded, a little bit of a recovery into the close. Today, gapped up, faded, 3 waves down, a little bit of a rally into the close. Again, today's highs and lows within Friday's highs and lows. So the market, after breaking out of this little bull flag last Thursday, just kind of biding its time to wait and see what the next economic data, the reaction to the next economic data. Also, from a seasonality standpoint, May is supposed to be a positive year. All in all, this is based on the presidential cycle. This is supposed to be a positive year before we take a break in June and through the summer. But let's not get ahead of ourselves. Here's the NASDAQ 100, also an inside day, but finishing on the positive side. Dow Jones Industrial Average snapping the win streak. Higher high, closing below, closing down on the day, but only down 0.2%. S&P 400 mid-cap index gapped up, faded. 2 straight negative closes there, but nothing wrong at all after the decent move up that it's had over the last week and a half, down 0.1%. And finally, the Russell 2000 pulling back, but off of its highs, but still closing positive today. Also looking fine. So back to the S&P 500 tomorrow. We should see the 21-day moving average cross up through the 50-day moving average, and whether or not that sticks there will depend on the reaction to PPI and CPI. Remember, we've been looking at two different scenarios. The first one being back here last August, where we attempted a rally after what almost looks like a picture perfect replica of the sell-off here in late July, August, before we got back above the 50-day moving average, rallied for a few more days, and then rolled over in what would become the second leg down. In that situation, we were never able to get the 21-day crossing back above the 50-day. So that will be one positive if that actually happens and it sticks. The other situation that we were monitoring was the recovery off the lows back in the beginning of November, when we had a follow-through day, and that we just were off to the races after that, with the green line, the 21-day crossing up through the 50-day at a pretty steep angle and just continuing higher. So those are the five major indexes. Next, let's take a look at the VIX. The VIX up pretty big today, considering how tight the index action was, but this is probably a snapback. Looking forward to the possibility of some volatility coming up with PPI and CPI after 4 days down, still above that 16 level at 1360. The US dollar, pretty tight range today, down 0.1%, under the declining 21-day moving average. How did that impact the precious metals? Gold pulled back 1.1% today after its gap up on Friday. Gold stocks also weak today, down a little less than 1% after running into the top of this handle that it's forming in a big cup and handle. Silver was positive on the day, however, up barely. And Bitcoin with the big snap back after some weak action recently, gap up, and it held up 4%, reclaiming the 21-day moving average. Bulls want to see this 21 roll the slope of the line, flatten and roll up, and support price as it heads higher. On to bonds, BND, the broad bond index, down, up 0.1%, but near the lows on the day. TLT, the long bond, up 0.26%, also in the lows of the day. Price up, that means yield's going to be pulling back a little bit, down 0.5% on the long bond, and on the 10-year, also down 0.5%. Okay, that's our inner asset correlation. Let's get to the tail of the tape. You can pause this. I'll hit the highlights. Didn't discuss, but Head and Connor touched on it in their weekend review, that sentiment pretty quickly shot back up from a bullish standpoint, which is from a contrarian standpoint, bearish, as the AAII. Really what happened was the bulls dropping quite a bit here. I'm sorry, the bears dropping by 9 percentage points. And NAAIM, this is asset managers, up to a 91% allocation, a 30-point tick up there. So nothing, the old saying, nothing like price to change sentiment, certainly applied there. Mentioned the news that we're waiting on. Day count, 2-day consolidation, 8 days above the 8-day exponential moving average, 7 days above the 21-day moving average. Sector standout, retail, K-Web, that's Chinese internet, solar, copper, and cloud software stocks. To the downside, home builders, gold and gold stocks, and uranium. Two minor changes to the portfolio. We added a little bit to our Micron and VRT position. Bottom line on the day, gap up fades, but we had a tight inside day waiting on PPI and CPI data. Also, the volume on the 21-21, only 3 stocks above average volume, most of them, and you can see the volume column here, most of them down 30, 40, 50% below average on volume. So let's get to the 21/21 first. Let's discuss what we punted out from last week and why we punted it out. Just some overlap here with SE. Nothing wrong with it, but they also report tomorrow. So it's really an overlap with CPNG. We'll see how that plays out with the reaction to earnings. Ironically, I believe CPNG, well, it undercut and reclaimed the 21 by the end of the day today. So SE removed for overlap. A-Lab broke, gap down on earnings and closed below the 21, so that was punted out. PHM, there are like 4 different home builder stocks that look exactly like this, forming cups and handles, including the ITB ETF. If we decide to play this, we won't go with an individual name. We'll go with Nail, which tends to outperform because it's a leveraged ETF. So that's why we pulled that off. Spotify, we sold it last week um, on relative weakness. It broke below the 21 today, so that came off the list. And Generac, which was really had a nice day today, up 1.85%, but was kind of an overlap with Carrier, which we own in the portfolio. So those are the five that were punted. Let's take a look at the new 21 over 21, and we'll start off here. We're going to sort these by price change today. Start off with Abercrombie and Fitch, which is working on the right side of a pretty nice looking base here. It was a leader for a while. All leaders correct at some point. That's all it's doing, showing some relative strength over the last 4 weeks. Transmedics also carry over from last week, continuing to work nicely higher. Micron, we added to this today on the move above that little 5-day shelf that it formed. And Freeport, also higher on the day, almost a new closing high for this last 4-month period or 4-week period. NVIDIA positive on the day, very tight action here. This is coiling for a move. Excuse me, has earnings in less than 2 weeks. Pure Storage, basically flat on the day. AppLovin, this is a new add to the portfolio with its earnings gap. Excuse me, and continued strength. Nice reaction today from a gap down. It recovered nicely. Goldman Sachs, a carryover, continues to stay strong. CrowdStrike, largest position in the portfolio, tight action pulling back today. CEG, second day of a pullback. Also, we own that. VRT, anything with a green flag over here, we own it. VRT, we also added to this today on the undercut and reclaim of the 8-day, closed just barely below the 8-day by the end of the day. First Solar, second day of a pullback. Howmet, second day of a pullback. GDX, second day of a pullback. Upang, undercut reclaim of the 21. American Express, pulling back, forming a little mini cup. Carrier, pull back today after 6 straight days up. Nutanix, a new one added today, pulling back today after attempting to break out of this nice double bottom last week, showing some nice relative strength over the last few weeks as well. GEV, a carryover, big pullback today, down 3.4%. Kava, the hit piece came out on this from a short seller. That hit the stock, a little bit of a bounce off of the 8-day exponential moving average, but still down 3.4%. Cameco, second straight day of a pullback, sitting basically right on its 21-day moving average today, down 3.8%. And that's it. That's the 21 over 21. So Nutanix was added. CrowdStrike was added. We bought it last week. App was added. Pure Storage was added. We bought that last week. And I think that covers it. So that's the 21-21 for this week. All of the returns that we display on the homepage today or this week will be from those 21 stocks. Not the best start of the day, but you can see from the charts that most of them got just a little bit too extended, and they're working on a 2-day pullback now while the indexes consolidate, which is pretty much what most leaders have been doing. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. Phone is 855-REAL-WEALTH. That's 855-732-5932 if you're interested in becoming a client. Reach out to my partner, Dan Stewart. That's dan@revereasset.com. Our website's revereasset.com. I'm on Twitter @dvandenbord. Our YouTube is Revere Asset. I'll be on IBD Live this Friday morning starting at 9:20 Eastern time for about an hour and a half. So looking forward to that. And with that, I'm going to wrap it. Reminder, it's not how much you make in the market, it's how much of that you can keep. Our flagship portfolio is named GROTECTION to grow assets during uptrends, protect them during downtrends. Common sense approach. It's what you do with the rest of your life. This whole buy and hold, stay in the market forever is Wall Street hypocrisy and a massive conflict of interest because they don't get paid if you don't stay in their products. And there's no reason to sit in products and suffer big drawdowns during bear markets. There's not a bear market going on right now. That's a positive market, and we're participating. And if you like this common sense approach, give us a shout. That's going to wrap it. for Monday, May 13th. This is Don Vandenbord with Revere Asset Management telling it like it is. Thanks for listening and have a great day.